Okay, now let's go through the budget. So budget is extremely important because you don't want your cash run out at a certain time. So the way we set up this tab here is we have our capital activities, investment activities, and our cost, income, and management fee here. So we lay out everything and estimate every single month and then get our ending cash. So for example, these are the capital call we planned in the business plan tab. And based on the date we're setting up here, so this cash, for example, $1 million will come from January, and then this $4.6 million January 2, and then 9.5 based on the date May here, and it will fall into month May. And then we have our distribution from AI company and prepaid loan balance. This is from our business plan number here. And the business plan, this is our distribution. So in this table, we show our cash flow from our capital activities, capital calls, and distribution. And they lay out very clearly in the first year in this table. And then next one, we're going to do our investment activity. So for all the money we bring into the fund, now we're going to spend $800,000 into the laundromat in January, and we're going to spend $4.6 million into the AI tech in January. And then in May, after we got all the money, we're going to deploy the money into e-commerce and into the apartment loan. So these are the investment cash outflow we have from our investment. Meanwhile, our investment will bring some dividend and interest income. For the two loans, we do have monthly interest income. So for the e-commerce loan, we have 49,339 loan payback. So this is number here. And then each month will be different. For the loan we set up is we do have fixed payment back every single month, and we have the principal coming back as part of investment cash flow inflow. And we will have interest booked into our income. So that is why when you come to the income part, we have $13,333 for income booked in June. And then the same for the construction loan. We have the principal $33,000 and here booked, and we have our interest $37,000 booked here. So the budgets are in different categories. The principal will come to the investment activity, and this is to net the principal of the loan. And the interest income will be booked into the income part. And they are different each month. We will work our loan schedule next after we go through the budget. And then here, now we have our cost. These are my made up numbers too. I just made up some typical costs would happen in fund. So I assume we have $20,000 legal fees for ongoing service related to fund management. And then we assume we have $8,000 director fees. So these are the fee paid to directors for the service during the fund's management period. And we have our compliance fee. These are the costs associated with ensuring compliance with the regulatory requirement. Then we have data market fees. So these are just the expenses for accessing data service used for investment analysis and management. And then we have our fund admin fee. Those are the administrative fees for managing the fund, often based on the fund asset. If you're a GP using outside service, and you would pay the fee. But if you're not, and you probably have in-house team to deal with this. But here, I just put as a typical fee here. And then we have our due diligence fees. These are the costs for due diligence service during investment evaluations. And then we have other professional fees. And then we have other various professional service fees related to fund operations. This is how we lay out all the fees for this first year. And these are like a monthly, I just simply divided by 12. So it's all based on date. If there's any number change, for example, I make it like a 500, all the numbers will change each month, right? So all the numbers, they already pick up the date in the formula. If I made the frequency to be 24, like 2 years, the numbers will be divided by 24 months and go through 2 years. Let's go 2 years. No more after 2 years. So anyway, let's go back. I made the rest of the cost monthly. And for this one, I made the due diligence one time. If I make it 2 times, will be split into 2 months. If I make it a 12 month, and it will be every single month. And I could change the date too. Right now the date is February. If I make it April, it will be April and May. So anyway, we still come back to our original setup. And after the cost and after the income, now we're talking about management fee. So the way we set our management fees, and we will charge annually on commitment capital, paid quarterly. We are just picking up the date. If the date is among the start and the end date, we will do 2% of the commitment. The total commitment is $15 million, the amount we called already. And then we will divide it by 4 quarters. So this is the quarterly management fee we lay out in the 4 quarters. The way we set up this Excel is just to make it dynamic. Any number change will automatically populate it. For example, right now we make 2%. If we make it 3%, the amount will change. So this is our budget tab here. I had to play around a little bit to make sure by the end of each time period we have positive cash flow. The net cash flow is just the total of all this cash in and outflow by the end of the month. And we do have our net cash flow each month to be, let me see. Okay. The reason right now this does not work is because I need to anchor J, then it will work. Yep. So by the end of each month, we have positive cash flow, which is a good sign. Otherwise, in real life, it will have big issue when the cash is negative.